TSMC Q2 earnings preview. AI is blazing hot, but profits feeling a chill? TSMC reigns supreme in advanced AI chip manufacturing. The key question for this earnings report: will management raise their full-year guidance? We think they will because AI demand is just as strong. What's the market focused on? TSMC is set to announce its 2025 Q1 earnings Q2 by Taiwan's calendar before the US market opens on July 17th, fueled by explosive AI demand. Q2 revenue soared to 933.8 billion new Taiwan dollars, up 39% year-over-year and 11% quarter-over-quarter, a record high. However, when converted to USD, it's around $29.2 billion, which is at the top end of expectations. But due to a strong appreciation of the new Taiwan dollar from 32.5 to 31.9, the dollar amount looks slightly weaker. 3 key things you must know. 1. Market outlook versus short-term risks. The long-term outlook for AI chips remains highly optimistic. Demand for GPUs and ASIC core computing engines is a clear long-term winner, but in the short term, beware of the landmines. Tariffs policy can flip overnight. Currency fluctuations and TD has surged. The current market consensus for TSMC's Q2 EPS is 68 new Taiwan dollars and 3 cents, a 41% year increase, pretty solid. To gross margin is the real focus. Everyone's watching gross margin closely. It determines how much profit TSMC actually makes. 2 major issues are affecting it. Currency appreciation. TSMC previously stated that a 1% NTD appreciation cuts gross margin by 0.4%. This quarter, the NTD appreciated nearly 7%, which could drag margins down by almost 3 percentage points. Arizona factory burn rate. Remember TSMC's $100 billion plan to build 5 fabs in the US. Recently, the Arizona fab reportedly shipped its first batch of 4 nanometers wafers to Apple, NVIDIA, and AMD, but will these fabs hurt overall margins? That's still unclear. TSMC's previous gross margin guidance was 57% to 59%, but the current market consensus is 57% to 58%, meaning it's teetering on the pessimistic upper edge. 3. Will they raise full-year guidance? TSMC now earns 59% of its revenue from high-performance computing HPC, i.e., AI chips. Major clients include NVIDIA, Broadcom, and AMD. Meanwhile, smartphones make up just 28% of revenue, with clients like Apple, Qualcomm, and MediaTek. That the smartphone market is weak. Global shipments in 2025 Q1 grew just 1.5%, marking the 4th straight quarter of sluggishness. Unless the iPhone 17 lineup performs miracles, don't expect much from mobile. In contrast, HPC is the real growth engine. NVIDIA's GB300 series, Google's TPU V6e. Both will enter mass production in the second half of the year, so AI revenue might keep booming. TSMC currently forecasts full-year revenue growth in USD terms in the mid-20% range. Investors are watching closely to see if they'll raise that number. Summary: risks versus opportunities. Potential upside catalysts: product price hikes, CAO's advanced packaging expansion. Risks to watch: tariff changes, currency volatility. Valuation: TSMC's forward P/E is 22x, well below the semiconductor industry average of 47x. Average price target is near the current stop price, with a high target of $270. 1-sentence summary: TSMC's AI business is on fire. And the earnings report quote: impress, but don't forget the lurking threats from currency moves and costly US fabs that could eat into profits. NVIDIA strikes back. China market: goodbye wasn't forever. You read that right, NVIDIA is back in China. Just when everyone thought the H20 chip was permanently banned from the Chinese market, the story took a sharp turn. On Monday, NVIDIA announced the US government has approved selling the H20 to China. The AI chip that was once sealed off by the Biden administration has now been greenlit. NVIDIA got the export license time to ship. Investors rejoiced. NVIDIA stock jumped 4% on Tuesday, closing at $170.70. People were reading the news and smashing that buy button at the same time. To backstory: drama and policy whiplash. Let's rewind to April this year. The US government suddenly tightened export restrictions on chips to China. H20 got blocked, no sales allowed. CEO Jensen Huang wasn't pleased. This ban will cost us $10.5 billion in revenue. What are we even doing? In May, he added that the ban was backfiring, handing business to Huawei. If we can't sell, Chinese companies just hand their money to Huawei, giving them more R&D power to compete with us. Jensen's classic lines: if you think banning H20 will stop China's AI progress, you're being naive. If we don't compete, China's AI ecosystem will thrive in our absence. Eventually, they'll create a non-US AI platform that spreads globally, and we'll lose our edge. Translation: blocking us makes our rivals stronger. Let us sell, we've got a fighting chance. Then, plot twist. Jensen met with Trump last week. Yup, he's back in the spotlight. And now surprise, the export license gets approved. Coincidence? UD sign. Not just H2 or RTX Pro is back too. Confirmed. Both the H20 and RTX Pro GPUs can now be sold in China. This isn't just great for NVIDIA's second half revenue, it also gives a major boost to early 2025. Now NVIDIA can really battle Huawei not just in China, but globally. Analysts raised NVIDIA's price target from $205 to $235. Bonus tailwind. Meta's super AI data centers. Zuckerberg posted on Threads that Meta will build massive AI data centers, the first one named Prometheus, launching in 2026 in Ohio with more to come. And guess what powers these megacenters? Yep, NVIDIA AI chips. NVIDIA's 2025 scorecard took a beating in April, down 30% YTD at one point, but bounced back up 27% YTD now. Last week, became the first company ever to reach a $4 trillion market cap. One sentence summary: NVIDIA's return to China is more than just an unbanning, it's a pivotal moment in Jensen Huang's global AI chess match. The AI battleship is at full throttle, don't jump ship now. AMD gets the green light, China reopens its doors, big win for AMD. The US Commerce Department has agreed to re-review AMD's export license request, which likely means their MI308 AI chip, think of it as AMD's version of NVIDIA's H2, will be shipping to Chinese customers soon. Flashback to May, AMD was stressing. This export restriction could cost us $800 million. Q2 and Q3 revenues are in for a cold spell, like $1.5 billion worth of chill. But now, winds have changed, blowing strong from the east. Q3 and Q4 GPU server sales might take off. Looking ahead, not just short-term gain. The positive momentum isn't just about the immediate quarters. It also paints a clearer picture for future earnings. Current forecast: AMD's AI server revenue in 2026 may exceed $15 billion. Why the confidence? China market is back. AMD's customer base is growing. New AI server architecture is coming in 2026. Market share could expand significantly. So we've raised AMD's 12-month price target from $165 to $200. How? We use the projected 2027 EPS of $7.50 and applied a P/E multiple of 26.7, giving us this reasonable new mini goal. What does it mean? Bigger revenue equals fatter wallet. Healthier balance sheet, stronger free cash flow. The market liked it. AMD stock jumped 6%. Rumor has it, once the license is officially approved, AMD is ready to express deliver MI308 chips to China. One sentence summary: AMD just broke free from a traffic jam. Now not only can they catch up on lost orders, they're ready to floor it down the golden AI highway. And if you bought AMD a month ago when we recommended it, congrats, it's up 30% already. We remain bullish long term. AppLovin misses S&P 500 inclusion again. Don't cry, the chart says it's just catching its breath. Everyone's been watching the latest S&P 500 reshuffle, and the result, AppLovin app got snubbed again. Even though two of its fellow ad tech brothers, Datadog DDOG and The Trade Desk TTD, made it into the index, AppLovin is still stuck on the waiting list. Datadog gets in. The comeback dog is barking loud. Honestly, Datadog's inclusion wasn't much of a surprise. Since its Liberation Day in April, the stock has doubled. After breaking out on July 3rd, It filled a 15% gap. Flawless technicals, a thing of beauty. The trade desk, wait, are you sure that one belongs? TTD's inclusion had some scratching their heads. The stock is still slipping mid-slope, down nearly 50% from its December 2023 highs. While the rest of the market is dancing, TTD still warming up on the sidelines. AppLovin didn't get in, but just you wait, something big is brewing. Don't lose faith just because S&P gave AppLovin the cold shoulder. The stock has surged over 300% in the past year. That's not weakness, that's still waiting for my turn. The chart shows it's consolidating and storing energy. The key technical level now is just below $430. A breakout here could spark the next launch. On Monday, the system triggered a buy signal. For those who missed the earlier rally, this might be a second chance entry. Price is still holding around the critical breakout level near $353, which is a classic retest and confirm move, healthy and constructive, like stretching before a sprint. DAC in February, $500, was a tough resistance level. As long as app holds its ground now, the technical roadmap looks like break for 100, aim for 500. Bottom line, today's setback may be tomorrow's takeoff point. No S&P spot, no problem. The market provides the runway, and the chart gives the lift. AppLovin may not be today's headline act, but it could easily be the next tech leader in the making. One-sentence summary. AppLovin may have been left out of the S&P 500 for now, but its chart is quietly scripting a comeback king story. Mini NVIDIA ALAB rallies hard. Should you jump in before earnings? The AI wave is just getting started, and tech stocks are already taking off, especially anything connected to semiconductors, the true MVPs of this bull run. Astera Labs ALAB is one of the rising stars. What do? In simple terms, they make high-speed connectivity chips used in AI and cloud data centers, helping high-performance hardware communicate seamlessly. Modules, circuit boards, connectors, you name it, ALAB builds it. Partnered with NVIDIA, firing on all cylinders. What's getting investors fired up is ALAB's close collaboration with NVIDIA. They've integrated NVIDIA TSM link fusion into their platform, boosting GPU interconnect speeds and enabling bigger, more complex AI models. Think GPT or Sora-sized monsters. In plain English, it helps the AI brains talk faster, work smarter, and max out performance. ALAB stock hitting new highs. Chart looks super strong. Since bottoming in April, ALAB has doubled in price. A series of higher highs shows this is no random spike. This stock has substance. Volume has been climbing steadily too, meaning more investors are paying attention and buying in. Strong earnings, rising estimates. Since its IPO last year, ALAB has beaten expectations every quarter. Check this out. Q1 May report. EPS, 33 cents, beat by 17.9%. 4-quarter average beat, 28.4%. That's what we call a reliable performer. Analysts are now raising their forecasts. FY EPS, $1.35, up 75 cents from 60 days ago. Revenue, year growth 77%. Net income, year growth over 60%. Next quarter reporting early August. EPS forecast, 33 cents plus 154% yo. Revenue, $173 million plus 125% yo. This is not gentle, smiley growth, this is explosive growth. Should you buy before earnings? ALAB's current setup in a nutshell. Strong chart, strong fundamentals, and non-stop good news. Technically, the stock has been consolidating in a range for 2 months, likely building up for a post-earnings breakout. Even better, with analysts raising estimates, there's a natural safety cushion. Short-term volatility is less likely to do lasting damage. Summary: ALAB is riding the AI tailwind. NVIDIA partnership is a major catalyst. Solid earnings history and bullish future expectations. Strong price action and volume trends. One-sentence summary. ALAB is one of those rare AI plays with both rock-solid fundamentals and beautiful technicals. And with earnings coming soon, it could be the next rocket launch. Current price, $92. Average target, $105. High target, $120. Final wrap-up. TSMC, AI business is booming. Thursday's earnings report could shine. NVIDIA, back in China. Don't sell your shares just yet. AMD, up 30% in a month. We're still long-term bullish. AppLovin, snubbed by the S&P 500 but could lead the next tech surge. ALAB, earnings coming soon, could be the next breakout. If you enjoy our video, don't forget to subscribe, hit the like button, and turn on the notification bell so you won't miss any of our future updates.